Hi there, eToro. It is Monday, the 12th of July, and that means that it's time to look at what moved the markets last week. Let's take a look. All right, starting with stats, we can see that in the 12 months to July, so the 1 year performance for the S&P 500 is roughly 39%, whereas my portfolio has put in about 51.45%. Now, it's pretty obvious that my returns have been range bound for several months. I have been making adjustments to the portfolio over the past few weeks. This Wednesday, I will have my quarterly call with my copiers where I will talk about recent performance and the things that I've done. I'll share that link later today, but more likely tomorrow. So feel free to drop in and you can see me talking about my background, the portfolio, and the strategy for the coming quarter, and ask me any questions that you have. One reason that we've had some drag on the portfolio is that I took the decision at the beginning of this year to diversify away from just the US. And so roughly, I'd say 13 to 15% of the portfolio has been in UK stocks during that time. So, and this is part of the reason that we haven't tracked, or part of our portfolio hasn't tracked the S&P 500 and the NASDAQ. So what you can see from here is that the UK 100, so the FTSE 100, the 100 largest companies in the UK, they've not yet managed to climb out of the hole that was created by the initial crash last year in February, March time. So to me, this tells me two things immediately. First of all, it sucks because the part of my portfolio that's invested in the UK has been growing slower than those stocks in the US. But it also tells me that the prices of UK stocks are much healthier than US stocks and the ongoing concern that they're overheated. So I'll talk about it in detail on Wednesday and why I think this is bad in the short term, but good in the future for our portfolio. Part of the reason is that business confidence in the UK is very high. So is consumer confidence. So our company is ready to open up. We have an announcement by the Prime Minister later today about the reopening on the 19th of July. And so I think that because a large portion of our population is already vaccinated, parts of our economy at least will do very well until the rest of the world is similarly vaccinated. On to our next piece of news. So I have spoken about this in the past, and it looks like this is making very fast progress. The 15% global minimum corporate tax rate has more or less been agreed by, I think it's 132 countries now. The interesting part is that it's only going to take effect in 2023. And this will be for a few reasons, probably two of them being that it's going to take a lot of time to sort out the legalities of this and decide how it's actually going to be done. And the second reason is that a lot of companies right now are still recovering from the pandemic, even some of the global companies. And so we don't want to subject them to massive changes to the taxation system right now whilst they're still trying to survive. On to China. China. So this was fairly big news last week. This headline is inaccurate. It's far more dramatic than the reality. And for those of you that watch these videos, you'll know that I get quite annoyed with the media doing this. So Chinese businesses that want to list in the US need to go through a very weird process. They set up a business structure. I think I have a diagram here. So they set up a variable interest entity business structure because foreigners cannot own a piece of a Chinese company in many sectors. Some sectors they can, but tech is not one of those sectors. And so I think it was around 2000 that this model was tested for Chinese businesses for the first time. And effectively the way it works is a Chinese company wants to raise money by having investors from places outside of China. So a shell company is set up, and it's usually in a place like the Cayman Islands. And a business relationship is established between the shell company and the operating company in China. And usually the agreement includes something like an exchange of revenue and or profits from the Chinese company. And then we, the investors, buy a piece of that shell company through something called an American Depository Receipt. So it's complicated, right? And the Chinese businesses are abstracted and made available to foreign investors this way. And every few years since this has been set up, since this process has been used, investors have had something that scares them into thinking that the Chinese government is going to make this mechanism illegal. They've never officially said that it is legal. They've never officially given their blessing. And now with the Chinese listing, the listing of Didi, so China's kind of Uber equivalent, listed in the US stock exchanges 2 weeks ago. And in doing so, they had disobeyed the Chinese government. The Chinese government had said, please, can you delay your listing because we want to review some of your data policies because there's the potential for you to expose personal data about Chinese citizens as part of this listing in the US. The company didn't listen. They listed anyway. The Chinese government said, fine, we can't control that, but what we're going to do is all the app stores in China are no longer allowed to list your app. So no new customers for you. And that was the trigger for the fear around this time. But also the Chinese government has said, listen, we want to review whenever a Chinese company sets up this kind of corporate structure before they list in the US. So China wants more control of their local businesses when they list outside the country. I don't think that's unreasonable. But it has, in combination with that happening and dramatic headlines like this being used, the fear is that China might say ADRs of Chinese businesses are now illegal. And so if you hold shares of Alibaba, the Alibaba ADR, you're not going to be compensated in any way. Your stock is now worth zero. There's no value to your stock. That mechanism is illegal. Goodbye. Now, I think this is probably fairly unlikely because China also benefits from the foreign investment in their companies, but it is an additional risk into all of the other risks that there are around Chinese companies. And so I took the decision last week to sell off half of my Chinese stocks. I will maybe trim my position even further until there's clarity around the government's decision on this. But I still do think Chinese businesses are a good place to be invested. It's just, my God, there are so many risks around them that it's just a little bit too much now. I wanted to talk about the impact of this too. So ByteDance, this is the creator of TikTok. They were going to IPO at a crazy valuation, and they decided we're not going to do it now. We want some certainty around the way that this works. We're going to comply with the Chinese government, and then we'll see how it goes. I wanted to clarify this too. So 360 Digitech, QFIN, as you might know it on eToro, dropped 30-something% on open in the middle of last week. And initially it wasn't clear why, but then we found out that the app had been pulled from the Android App Store. And there are whispers of other things happening, potentially some fraudulent activity. So the stock price dropped off heavily. People thought it was because of what was happening elsewhere, but it doesn't seem to be the case. So I was lucky to exit my QFIN position before this news dropped as part of my trimming my Chinese positions. And I did a little bit of swing trading through last week. So I'll wait. This looks like a promising company, but if it's been fraudulent, I don't want a piece of that. Okay, now this. I mentioned last week that the stock market likes to be afraid of one big thing at any point in time. At least one big thing. There needs to be one big fear that's making everyone think that we're at the top and the crash is imminent. And at the moment, that is a slowing economic recovery. So a few weeks ago, the fear was that we were going to have hyperinflation because growth was too fast. And then 1 to 2 weeks later, the whole market decides that, no. My concerns are really the very opposite of that. We think that the economic growth is not going to be fast enough. So just try to bear this kind of craziness in mind. The market is absolutely nuts, and this is why we invest over the long term. Over the long term, the market is fairly rational. In the short term, it's crazy. That's absolutely nuts. So the reason that this statement is true, by the way, is that, and I will come to it in a moment, is that this is China's GDP growth rate. In the depths of the crash, and let me see, what's the maximum time frame I can go for here? So in the depths of the crash, we saw GDP in many countries drop to the lowest level basically ever. And there's a bit of a forecast here too, by the way. And then with all the stimulus that was injected into the economy, the prices rose, GDP growth and all other types of growth rose to the highest level ever. And that's part of why we saw supply chains broken. That's part of why we saw the fear of inflation being so high. But now, as the world starts opening up and we get past this massive booming recovery phase, growth is still high, but it's dropping off to more normal levels. And that is more or less what this headline is saying in a bit more of a scary way. So instead of saying growth is returning to a more normal rate, it's trying to put the fear of God in you and talking about a slowing economic recovery. Nevertheless, a good piece of news. So China had been tightening up their policies around credit, which means that growth was slowing, and now they've taken an action, a pretty strong action, which will help growth, which will inject a little bit of growth back into the economy. Growth is a large part of growth in any economy is down to the cost of money. And so the People's Bank of China, the Central Bank of China, has said, okay, all you banks, we're lowering the reserve requirement, which means you can lend out more money. And so this gives them the incentive to do that, because the more money they lend out, the more money they make. So I think we could see a little boost to Chinese economic growth over the next quarters because of this. This update seems like it's only about China, but it's not. There's just a lot of stuff that's gone on around China recently. So there's been a dark cloud hanging over the Douyu, and I don't know if I'm pronouncing that correctly. I'm sorry if I'm not. The Douyu merger. And initially, when the merger was announced, the stock price rocketed, and then it became less certain that it was happening. We won't get information about it. And then we started hearing whispers that the merger was off. And Douyu's stock price has been tanking because of all the other pieces of negative news coming out of China, but also because this dark cloud was hanging over the company's head. Now it is official, and it's great news that it's official, because at last it gives us clarity on what the hell is going on with this company. It's also good news because this is a very, very good company. They're in a very large part of the Chinese market for streaming. So they're often called the Twitch. For those of you that know Twitch, they're called the Twitch of China. And I'm not going to do a super deep dive here, but if you look at Douyu, the company, the share price is now at the lowest ever. It's never been lower since listing. But the company's revenues are higher than ever and growing fast. So the compound annual growth rate of revenue is 87-ish%. Good forecast growth in revenue through next year. Excellent forecast growth and profitability next year. And the amount of revenue that the company brings in is very close to the market cap of the business, and it's a tech business. So the market has punished the multiples on this company because of all the negative sentiment around it. Just so you know, Twitch was acquired in 2014 by Amazon for $970 million in cash. So let's call it an even $1 billion. In 2014, Twitch had 55 million users, and Douyu has more than triple that today. Now, obviously, this doesn't mean that the revenue, that the stock price should be triple exactly, but I think that the stock price, based on all the other fundamentals that I've looked at, is worth at least 3 times what it is today, and probably quite a lot more. So I'm not buying any more Douyu because I'm trimming all of my Chinese positions, but I am holding on to the positions I do have because this price is absolutely ridiculous. Other big news items, I'm sure you're sick of hearing it, as am I. The Delta variant is spreading very quickly through the whole world now, particularly in Asia. There are all of the countries that are able to are ramping up their vaccination programs as fast as humanly possible. The US is even going door to door, trying to get more people vaccinated. So there's a massive rush now. It does seem that being vaccinated means that you might still catch the virus, but hospitalizations and deaths are very, very low in the UK, and I think UK is effectively the test case for vaccinations versus the Delta variant. So it's not great that the virus is spreading so fast, but it is good that the coverage in terms of vaccinations is looking pretty good, unless unfortunately you live in Africa. All right, lots of things shook the market last week, and one of them was the Fed was fear about a taper tantrum. So the last time we had a taper tantrum, I'll explain what that means in a moment, was in about 2013. And so a taper tantrum is when the US governments, or any government, starts saying that we are going to slow down the quantitative easing program and eventually stop it altogether. And when this happened in 2013, the market reacted violently downwards, but it didn't actually last that long. So the market had a very strong reaction to it. But then, as we all know, there was a bull market from 2013 all the way through to last year, or this year if you count it. So the Fed has said that they will talk about tapering soon this year, and it's expected that they will. The first meeting will happen in August. So the mention of this recently seems to have driven the market a little bit, a bit of the volatility of the market, and is probably one of the reasons that we've seen bonds jump recently. So a lot of stock investors or traders, they don't watch bonds very closely. Bonds are boring. What are they even? And I'm guilty of this up until probably half a decade or a decade ago. But bonds are a very important component of the market. The bond market is the largest security market overall. And the participants in the market are bigger than in the stock market. And they typically have access to other information beyond what we have. They usually are professional investors. So the bond market tends to be less volatile, and it gives us little hints into what the bigger players in the market are thinking, where the market might be going, the stock market might be going. So the bonds have jumped. When I say they've jumped, the price of bonds has jumped massively recently, and bond yields have dropped off a cliff. So we saw at the end of March, bond yields on the 10-year bonds, 10-year treasuries, jumped to 1.7%. I think it was the fastest climb in history for bond yields, and this terrified the market. And I don't know if you remember, this is what catalyzed the massive sell-off in tech and the fears about rising rates and inflation. And last week, the 10-year treasury yield plunged to 1.25%. So a massive drop in a very short amount of time, with the bond prices rallying. Because remember, yields and prices have an inverse relationship. This has people wondering, why has this happened? Very few people expected such a big plunge in bond yields. And part of the reason that people think it might be happening is because of the talk about tapering, and the fears that global economic growth is slowing. So bonds are a safe place to keep your money. They're considered, especially US bonds, are considered risk-free. So if you think the market is going to tank massively, there are a few different assets that you would run to. Bonds would be one of them. I'm not so sure that this is the entire reason for the drop in bonds. I follow a few fairly prominent economists, and they seem to think that there's a chance that the many large financial institutions have been repositioning themselves, getting out of their reflation trades and preparing for what they think comes next. And this move has been so big that it has hit the price and yields of bonds in making that movement. So I don't know if we will ever find out what actually was the root cause. There are many theories. It's interesting to know the theories, and it probably was several things all at once. But just so you know, this is what's been happening, and that's what people have been thinking about the changes in bond prices. Okay, I mentioned earlier the fear around growth rates. And I think that for the coming week and coming weeks, this is going to be a headline that we're going to see often. When people talk about growth, they can be talking about several things. They might be talking about GDP growth. They might be talking about growth in retail sales, growth in manufacturing numbers, produced numbers, etc. But for now, I'm going to use GDP growth as the example. So as I mentioned before, we were looking at China before. So China is taken to be slightly ahead of the rest of the market. They entered their stock market collapsed, and the GDP collapsed before everyone else's, and they recovered more quickly than everyone else. The US chart and the chart for many countries is very similar. So record setting low, record setting high in terms of growth, enormous fears about inflation, supply chains completely pummeled, the prices of things like shipping containers and lumber going off the chart. And now they're coming back to more sustainable, normal levels. They couldn't stay this high. It would have been ridiculous to stay this high. So coming back to normal levels, but still seeing good rates of growth, probably for the next few years, at least. However, I do expect volatility in this move from here to up here. The change in growth rates that we see means different things for different parts of the economy. And so we will see many traders repositioning themselves through this. And we already have seen that. That's kind of what's been creating the volatility through the past few weeks. Once that's done, I think we'll be moving into, and you'll hear the term more often, a Goldilocks economy, where we don't have the economy being too cold and the economy is not too hot. It's just right, and things are growing nicely. The European Central Bank wants to make sure that the European economy is able to stand on its own two legs before they start withdrawing support for the economy. And so they've said that they're happy to overshoot their previous targets a little bit. So I think that's good news as long as they can control inflation. So we will see what happens. What's coming this week? So the companies that start the US earnings season tend to be the big US banks, and you can see them. Here are the dates, and here are the banks. There are a few other players in there, Pepsi, for example. And so these companies will be reporting earnings, and there'll be a few different things dominating the headlines this week, but earnings from these big banks will be one of the key items. Everyone expects that they've done very well through the past quarter, and they will be watching, they'll be more interested in what the banks are saying about the forecasting for the rest of the year. So that's the more interesting part of earnings, not what's happened, but what they think will happen. And we have a few interesting economic things happening this week. So inflation numbers out of the US tomorrow, Tuesday, inflation numbers out of the UK on Wednesday, and then on Friday, we're going to see what's happening with retail sales in the US. So it's expected that retail sales are slowing, kind of following this chart. And so we'll see whether the reality aligns with the forecast. All right, that is it for last week. As I said before, I'll be sharing the link to my quarterly update on Wednesday. I hope you can make it. If not, I think it will be recorded, and I'll share the recording. Okay, have a great week. Goodbye.